Good morning, everyone. Hope you're having a great start to your week. It's Sean with Paycheck the Portfolio. Today, I'm going to talk about how I'm playing the Cornerstone Rights Offering to compound my net worth fast. Going to do a quick portfolio update like I do on every video, and then we'll jump right into it. Let's go look at the portfolio. So, looking at the performance, we'll go straight into the performance. You can see currently my net account value sitting at $130,000. My total unrealized gain is sitting basically at 34,000 or 13.5% there. If you look at performance at the 1 year chart below, basically I'm sitting at 46.5%. The S&P is at 15.5. The Nasdaq's basically at 21. The Dow's at 10.5%, and the Russell's at 6%. If you look at the 3 year, I'm at basically 80%, 79.5. The S&P is basically at 50. The Nasdaq's at 63. The Dow's at 33, and the Russell's at 12.5. Looking at my positions, just wanted to let you know what I was doing in the down market, just so you can see how my thought process works. I was adding to Cornerstone yesterday, which I'm going to talk about obviously here in just a minute. I was adding basically a lot of things yesterday. I added MSTR, the actual holding, yesterday. It hit its 200-day and actually dipped below its 200-day moving average. So when folks are usually selling is when I'm typically scaling in and buying, not huge chunks, but just taking advantage of things that are on sale. I did that back with UPRO and TQQQ back in the tariff situation, which you can see here. And, it's about just being wise and scaling into positions and keeping put option insurance on and making sure you're buying stocks and ETFs of value at valuable times, which will compound your account faster, which you can see in some of these cases when you're managing your portfolio correctly. So I want to jump into the Cornerstone Rights Offering and how I play that specifically. I get asked this question pretty often, so I'm going to do my best to make something that's a little bit complicated easy to understand. A rights offering is when a company or fund like Cornerstone, in this case CLM and CRF for the tickers, raise money by giving current shareholders the right, but not the obligation to buy new shares using a formula based off of its net asset value or NAV. So typically what the company does is they will offer you one share at a discounted NAV price for every three shares that you own. You can oversubscribe if you decide to do that, meaning you can ask for more shares beyond your holdings, and typically they will work with you on that and let you buy more shares. But the way that I play Cornerstone, and I'm going to summarize it and then go through line by line above, I will sell most of my shares at the N2A filing. That's a government filing that every company has to do. When a rights offering is filed. So I'll go in typically after hours. They always do this after hours. This last rights offering, they did it on a Friday evening going into the weekend. So this is very important. You want the access in your brokerage for extended hours trading. If you don't have that and you want to play the Cornerstone rights offering, please make sure you call your brokerage or check with your brokerage that you have extended hours trading capabilities. So when the N2A is filed, I'll go on and I'll sell most of my holdings except for 100 shares of CLM and 100 shares of CRF because I want to see what's going on with the rights offering. And I want the option to participate if something goes, haywire in the market. But most of all, I want the information that's rolling in from the company. So basically, Cornerstone on average, this isn't a hard and fast rule, but on average, they do a rights offering about every 1 to 2 years. You want to watch for on those websites. You can go find it on Google. You can look for N2A filings. You can search companies, and all you have to do is Google that. So you want to watch for signs of filings. In our Discord and in our membership, we'll alert people because we'll scrape those websites and we'll be notified, and then we'll go in and we'll sell after hours. So if you decide you don't want to be part of the Discord, you simply just have to watch that N2A filing. And this cycle repeats given consistent opportunities. So you want to obviously grow your premium throughout the year. Typically, when a rights offering is filed and you're participating, typically they're selling those shares or offering those shares is a better way to put it at 112% to their NAV. So that is a discount. So when you see CLM or CRF at 112% to NAV, 115% to NAV, even up to 120% to NAV, I'm still scaling in and buying shares at that point. When it starts to get about above, 25 to 30% to NAV is typically when you want to stop buying and start kind of holding and monitoring. So every Friday, Cornerstone updates their NAV premium. You can monitor the premiums there, and then you can determine, is the asset undervalued or overvalued relative to its NAV. I'm going to show you where you can find that. So online, if you just simply, again, Google Cornerstone stock and you go to their website, you can see every Friday they'll update their ticker. They'll tell you what the NAV price is here. They'll tell you what the current price is as of Friday of close. And then they'll tell you what the NAV premium is right here. So this is what you want to watch to make sure you're buying this fund at value. It's very unique because it compounds, it drips at its NAV. So every dividend you receive, which is about 18%, will drip at its NAV price for an immediate gain. And it also kind of tells you when it's affordable and when you probably should stay away. And then you can sell your shares high at the rights offering and buy back low when that rights offering is completed. So this is how you see the NAV and where we're sitting as it relates to its price. So again, typically the N2A is filed after hours. You'll want to go on to extended hours trading and go ahead and sell out of those. And then you want to lock in your gains because what's going to happen is the price is going to drift downward from dilution pressure and those new shares coming to market. Okay. So offering usually compresses the price to 112% to NAV, sometimes cheaper. This last year with the tariff situation, it actually dropped below that 12% NAV, 100 to 12% to NAV. If you hear me say 12 or 112, it's basically that 12% premium I'm referring to. So you want to buy back low and re-enter Cornerstone after the rights offering is completed. And then that way you're cycling your position at the top and buying back at the bottom, which expedites your compounding and increases your net worth. I get questions on, well, first let me show you how to do an extended hours trading, just so you can see that. So if you were to go into E-Trade or any of your brokerages and it's after hours, okay, if you click on this, and actually let me go to my actual holdings here. If you type in CLM here, just to give you an example, I just want you to see how it works. And you go sell, and of course I'm not going to do this. And you go market, and I'm just going to put, 20,000 in here just so you could see what it would look like. And instead of market, you want to put limit after hours. You always want to match the last price up here in your limit order. And then under duration, you click extended hours day, 7 a.m. I'll keep that back up here to 8 p.m. Eastern. And that's what you would pick after hours with after hours trading capabilities. That will allow you to lock in your price and to sell your shares with extended hours trading. Let's go back to the spreadsheet. I got asked specifically about boxing and what is boxing. So boxing's another strategy that you can use to, instead of selling your shares, you kind of put the stocks in a corner and you box it from moving up and you box it from moving down, and it locks in that price. So instead of selling your shares, you can box them. Boxing is when you simultaneously hold a long position and create an offsetting short position in the same stock. So if you don't want to worry about the N2A filing and the premium has drifted up to 130% to NAV, and you simply just want to secure your profits, you're not going to get any upside gain, but you're also going to protect yourself from downside. You can go in here and you can box these shares. All right. So in the CLM case, if you just wanted to box those shares instead of playing the timing of the rights offering, in this, you would simply click sell short, and it would automatically give you those proceeds. And basically you're selling short those positions, which is boxing your position, which keeps you safe in the event of an immediate downturn. So again, it limits your upside potential, but it protects you from the downside, and you make money that way. And then you can simply reinvest those gained funds back into the stock and make money that way and generate more shares, which generates more dividends and protects you from the dilution of the rights offering. So just to summarize, Cornerstone does a rights offering on average 1 or 2 times a year. It has an 18 or 19% dividend depending on the price of the stock. It drips that dividend down at its net asset value every month for an immediate gain. And on average, every 1 to 2 years, it does a rights offering. So you can drastically increase your shares. You can cycle in by selling high, buying back low. You can also box your shares, which creates stability if you don't want to watch the internet and you're worried about timing and all those different things. There's a few ways to play that. I also want to take you to Morningstar's review. You can see that CRF is a 4-star fund. You can see that their chart takes into account dividends, drips, and rights offerings if you participated in the rights offering, not timing it, just for clarification. But one really neat tab I want to show you before I go is if you click the premium discount tab, it will give you this heat map. You can scroll down and it will show you typically what their premiums have done on average, their highs and their lows by time of year. And so you can look at this and visually see when they had a rights offering, what its highs were, what its lows were, and you can make your own assessment for what's a good premium. You can see in some cases the premium gets up to 155% to NAV, and you can see other years, it was at 11% in some tougher years, right? Or bear markets, maybe a little bit lower, 21. But you can see on average, typically the range that it's going to have. So if I see again Cornerstone getting above 20 to 25%, I'm kind of waiting for that 17, 18, 19% NAV, and I'll keep dollar cost averaging, but I'll sell high and buy back low. I hope you found this video useful. I have a bunch of resources. If you need white glove, shoulder to shoulder strategy sessions, we have a Discord with tools in it. We have multiple calls that you can set up with me. I'll have those resources pinned in the pinned comments. Of course, if you have any questions, please put those in the comments of YouTube, and I'll do my best to reply to those. I always try to respond to every message. I hope you have a great day, and we'll talk to everybody soon. Thanks.